Okay everyone, welcome again to Nine Peaks Trading. Today we're taking a look at the pound New Zealand. Yesterday, just to recap, yesterday we took a Gartley pattern on the pound New Zealand that set up nicely right here. We took it around the 96.75 zone, 96.70, and then the market came down, filled us on our target ones that were at our 382 level, right at the structure level, and then pulled back up and took us out of the trade. So the market, as of yesterday, continued downwards, hit our structure levels that were predefined, and then rolled over and broke right through this secondary structure level right here that was actually holding our C leg, and came down into this last structure level that was the bottom of our X to A leg on yesterday's Gartley pattern. Now we saw the market came down and then spiked up a little bit. You can see that it just when it came down, it touched this support level and then just exploded back up. So what we're seeing here, and why I've highlighted these 2 points, is that we're looking at a double bottom. So if you scroll out a little bit, you can see, actually let's go to a higher time frame. Right now we're looking at the 15-minute on the pound New Zealand. Let's jump up to the 60-minute and see what this looks like on there. Give us a little clearer indication of what's going on in the market. We can see that this double bottom has actually been tested before and actually gave us a pretty large spike the last time that this area was hit. So we are seeing this area again being played over and over and over again, and what we want to do is make sure that we're taking advantage of the fact that this area is being tested again and again and seems to have a really nice bounce. So what we're going to do is the way we take these double bottoms, there's a few ways you can take them. The way that I prefer to take them, I like to see the market come in, prove to me that yes, this is an area that the market is going to respect, and then bounce back up, give me a 382 retracement at least from the leg that made this one. So from here, 382 retracement at least. You can see the 382 comes right into our previous structure level. We want this area to act as resistance, so I'm going to turn it red just so that we remember that this is resistance. We want this area to act as resistance, and then we want it to come back down, retest this level, and then continue on upwards. Now if the market comes up to 382 and then just blows right past it, we may want to set short orders at the 61.8 level. So market comes down, if it blows all the way past, our orders come in at the 61.8. If the market decides to retrace, come back off that support level, we expect it to come back down at a 618 level and then sky high. So that's two options right now that you have. You can either play the short here. So let's change this. You can either play the short here, the long here, the short here, or if this market were to come down again and then explode off of that level, you would play the long there. So these are the options that you have right now. These are very, very well thought out options. There's a lot behind them. And actually, let's take a look at Fibonacci confluence areas here. So let's get rid of some of the stuff that we drew in. Okay, so like we said, the 382, let's go back down to our 15-minute. So let's take a look at our areas of confluence here. Once again, if we do a Fibonacci retracement from the top of this leg to the bottom, we get our 382 coming in right at this resistance zone. If then we do an extension from the top of this zone, bring it up, we get our 1414. And if we do a Fibonacci extension from this high to this low, we get our 1618. So we have right here a lot of Fibonacci confluence, as you can see. And I bet you if we zoom out and we try to find some more confluence, it'll be there also. So let's do that. Let's see what happens here. Let's see what this gives us first off. Low point to high point gives us 786, also right in that zone. So let's clean this up a little bit. All we want to see, all we're interested in here is the 786 confluence zone. From this leg, all we're interested in is in the 1414. From this leg, all we're interested in is the 161.8. And then from our initial current leg retracement, we are interested in the 38.2 area. Okay, so you can see there that we have a whole lot of confluence. That's 1, 2, 3, 4 confluence zones right at our area of resistance. So we can expect the market, it'd be a very qualified guess to expect the market to come up and retest this area before coming down and possibly blowing past our previous, or like we spoke about, coming up and doing another 618 retracement and then flying all the way up to test the next levels. So this is a really good way for you to be prepared for whatever the market is going to be doing. You want to understand that if the market ignores all of this that we're doing and just continues downwards, we will have missed the trade, but at least we didn't take it right when we saw that this double bottom was setting up, because then we're really shooting ourselves in the foot most of the time. So we want to realize that while we can't 100% predict the markets, we can make very educated guesses. We can use our Fibonacci zones. And so we'll come back in another video and take a look at where this market went. But as you can see, it's already starting to pop up now, and we can expect it to reverse somewhere around these zones right here. I'm going to go ahead and I'm going to color this something else so that we can keep an eye on it. I'll make it cyan. We'll just wait and see what happens, and we'll be back. Okay, everyone, so we're back now. A few minutes later, this trend here came down, just like we talked about, hit our support level, came back up into, just get rid of this one, came back down into our zone that we identified earlier with as being areas of Fibonacci confluence, came right into our zone. In fact, touched, I believe, our 1414, almost touched it. We placed our entries a couple ticks in front of that just so that we would get filled, and we got filled on that. Next, we saw the market hit that point and start to retrace downwards. Just like we talked about, retracement from low to the new high of that particular trend. We place our target 1 at the 382, getting filled there in a few, I hope. And then our target 2's down at the 61.8. So just like we talked about, if this market is going to be continuing upwards, we'll see something like this, where the trend comes down, comes up into our reversal zone that we identified earlier, comes back down into either the 38.2 or the 61.8, and then blasts past our Fibonacci confluence zone and our structure zone. So this is a big zone for us right now. It is completely possible that the market might just come back to hit this zone and then continue on downwards to retest the double bottom. Either way, we're going to be ready for it. So we're expecting us to get filled right now on this. And yeah, so the market it was completely possible also that the market would retrace up to the 61.8 and then continue downwards to maybe retest this resistance level and turn it into a support zone. I'm going to change this. Come on, green. Okay. Basically, what you want to do is be ready for whatever the market's going to do. And so one thing that I like to do is I like to find these areas of support and resistance. I like to find confluence zones with Fibonacci. I like to look at the overall trend. As you can see here, I have a 200 SMA that's showing that, all right, the SMA is starting to dip downwards. So this helps us attain our targets. It all really comes together. One thing that I always run into, and I'm sure a lot of traders do also, is that because of the spread on Forex, we're seeing that we might not be getting filled when we should be getting filled. So the market came down and really should have filled me, but because of the spread on the pound New Zealand, I'm not getting filled so far. And you're going to run into this, and it might reverse on you, and then you'll never get filled on this, and you'll be kicking yourself. But one thing that you have to remember is that if you start moving your targets, you start changing your outcomes. You start changing the way that you trade just because you want to get filled or you want to make your target ones. But you can't think about the money. And really, I should be looking at how many ticks I'm making. But I used to be a somewhat amateur poker player. I love playing poker. And for me, the money really makes sense. It's ingrained in my head, so I don't use the pips. I look at the actual money, and that makes sense to me. To a lot of people, they like to see the pip value and separate themselves from the money, but I'm comfortable this way. It also helps you understand how much money I'm actually making. This is just one trade that we're doing. In a day, it's not rare to go through and make $800 to $1,200. On a good day, and on a great day, who knows how much you're gonna make, right? So I'm just gonna leave it, and if I start moving my targets, I'm actually minimizing how much I'm gonna make on this trade, just because I'm scared of losing whatever it is here. So let's talk a little bit about where I place the stops. Usually I like to place the stops above the previous structure level, but if I see that the market has been respecting the Fibonacci zones, then I will actually place, so this is the zone right here that we drew in, so let's make it cyan. I will actually make this zone more important than our resistance zone there, and so I'll place the stops just above the the Fibonacci zone there. That's a good way to minimize your losses. Just identify what is the market respecting right now at this point and play that. Okay guys, so last update now. It looks like the market came down and filled us on our 382. So we got filled somewhere around 94.72. And the market reversed before hitting our target 2s at the 618, made its own 618 retracement, a smaller one, and then continued to go trade sideways. So you can see now that there was a bunch of dojis and a hammer, and now the market is starting to trade upwards. As soon as our target 1s were hit at the 382, we moved our stops to break even. And now there's a possibility that this might come up and actually take us out of the trade. It will still be a winning trade, but yeah, we would like the market to come down and hit our 61.8 down here. So another thing to look at is that the market has been creating a channel here. So the way I draw these is I don't take the wick, I take the close of the body, and I find the alignment there. And then same thing here, close of the body, finding the alignment. And for me, this is the channel. Anything that breaks out of this is more than likely moving in that direction. So you can see what we're looking for out of the channel is a break above and then close above. So we need the opening and the closing of the next candle to be above this line right here. And if it opens up somewhere around here or even on the line, then we can expect that the market is going to go up and take us out of this trade. So not looking very good for our target 2s right now, but we did make a decent profit. Take a look at the time at the bottom here. It's only been about an hour and a half or to 2 hours since we took this trade, but you can see the potential that we have here. The potential is huge to actually make some good, decent amount of money, and this is not really that difficult. All you have to do is remember that you need to find reasons for why you're going to be taking trades and then qualify those reasons, whether it be the market harmonics, advanced patterns, Fibonacci ratios, support and resistance zones, hell, even fundamentals if that's what you're into. But really start stacking up all of your qualifications for a good trade and then take it. So in the next few videos, I'm going to keep pushing these videos out. We had to make a new channel, so what you're seeing here is probably one of the first videos again, but I'll be re-uploading a bunch of the older videos, and we'll just continue on making these videos and making sure that I'm capturing as many trades as possible. Basically, this is a very good method for you to continue following the market and making sure that you're following along with the market as it changes direction, as it changes its mind, as it switches from respecting Fibonacci zones to support and resistance zones. So anyway, subscribe. Make sure that you inquire about training videos or any personal training that you might want to request. I am going to be adding some training videos for private members and maybe setting up some sort of private group so that we can play off of each other's trades and really make some money together. So looking forward to all that. Stay tuned.